A very good morning. Myself, Dr. Chindu Chandran, the sustainability professional from SRSV. Esteemed guests and participants from around the globe, we welcome you to our webinar on adapting to Carbon Border Adjustment Mechanism, CBAM, a guide for Indian businesses and MSMEs, organized by the Sustainability Reporting Standard Board. We are privileged to host this webinar today. As we navigate the evolving global landscape, the CBAM represents a significant shift, especially for the businesses engaged in international trade. It's not just a new regulation, it's a call to action for us to align our practices with the growing demand for sustainability. Today, we will explore how CBAM impacts the Indian businesses, particularly our MSMEs, and discuss the strategies necessary to adapt and thrive in this new environment. Understanding CBAM is crucial for maintaining our competitiveness in global market. And through this session, we aim to equip you with the insight and tools needed to turn this challenge into an opportunity. So thank you all the participants for joining us today, and we look forward to our discussions and your valuable contributions. Now we would like to welcome CA Amin Shah Sir, SICASA Chairman, Haldwani Branch CIC of ICAI. To welcome CA Dr. Anuj Goyal Sir, the Vice Chairman of SRSB.
Thank you. So today we have Dr. CA Anuj Goyal Sir, who is a Central Council member of ICAI and a Vice Chairman of the Sustainability Reporting Standard Board. He also serves as a Chairman of the Ethical Standard Board and the Professional Skills Enrichment Committee and the Publication and the CDS Directorate. He has also served as a chairman of the Ghaziabad chapter of the ICSI and ICMA. With an extraordinary tenure of 17 years in the Central Council, 3 years in the Regional Council, and 6 years in the branch, including chairman of the CIRC and the various ICAI central committees, member of the editorial board, and more. He has made significant contributions to the profession. With a vast experience exceeding 30 years, and a wealth of knowledge, his contribution in the field of research and development have always been remarkable. He is a well-known speaker on various topics and also serves as a visiting faculty member of the various institutions. Additionally, he has worked as an editor-in-chief and editor of various publications of professional interest. We warm welcome you, CA Dr. Anuj Goyal, sir.
Thank you, CA Aman Sahaji, our Honorable past Chairman of Haldwani Branch and SICASA Chairman of Haldwani Branch, our Honorable Event Enabler, CA Harsh Goyalji, our very, very prominent educationist and chartered accountant, my very good friend, and of course, all our Honorable team of Sustainability Reporting Standard Board, which is of course doing wonders for the cause of the universe, I will say. Chindu Chandranji, Mr. Goyal, and all other team members, and of course, very, very prominent resource person, Prakhar Gupta ji, who is really contributing in a great way for the cause of the professor, for the cause of the society, for the cause of the sustainability, and all the viewers from each and every part of the world. We are going to take today very, very important topic on adapting to carbon border adjustment mechanism, CBAM, a guide for Indian business, and MSMEs. And I am really very happy that under the leadership of Sri Priya ji, who is the chairperson, we are trying our level best to see that how we can really do something very, very concrete for our mother nature, and how we can make our this earth a better place to live for the future generations to come. And friends, in recent years, the world has been focusing more on cutting down carbon emissions, which has led new rules. One of these rules is the carbon border adjustment mechanism, CBAM, introduced by the European Union. And this rule affects Indian businesses, especially those that export to the EUC. And friends, BAM is meant to make sure that goods coming into the European Union have the same carbon cost as those made in the EU. This is a big deal for businesses in India, so it's important to understand and adjust to these changes. Today's webinar will help you understand the details of CBAM and the steps Indian businesses need to take to comply with it. This session is especially important uh, uh, for small and medium-sized enterprises, MSMEs, who needs to address these challenges to stay competitive globally. I once again warmly welcome our speaker, CA Prakhar Gupta, who will share his expertise on how CBAM affects Indian businesses and what can be done to manage these impacts. And I'm really grateful to our event enablers, C. Harsh Goyalji from Ghaziabad branch and C. Aman Saji, Sikasa chairman and past chairman of very, very prominent branch of Uttarakhand, Baldwani branch. I'm really very happy that n number of CVers are there from each and every part of the country. And I encourage you to actively participate in the session and take advantage of this opportunity to learn more about CBAM. I'm very grateful for all of you for joining us today. Let's work together to make sure Indian businesses and MSMEs are well prepared to meet the challenges posed by CBAM, helping our country move towards a more sustainable and resilient future. So I'm really grateful to team SRSP, Sweta Goyalji, our Honorable Secretary. We are having back-to-back programs. We are having a national conference at Ghaziabad to see must be busy. There we are having Chindu Chandran ma'am, Manish Goyalji, and all other chartered accountants and very, very prominent professionals from SRSP. So thank you very much. Over to our team SRSP. Thank you. Thank you.
Thank you so much, Anuj sir, for your insightful address. Your profound knowledge and steadfast commitment have given us invaluable guidance. Your leadership continues to motivate us, and we are grateful for your direction. Thank you so much, sir. Now, we will be moving to our technical sessions of today, which promise to be equally enriching, focusing on providing valuable insights into how this mechanism will impact your operations and supporting the CBAM adaptation and explore the practical strategies for compliance and opportunity. Now, we would request CA Harsh Goyal sir from the Ghaziabad branch to introduce our speaker, CA Prakhar Gupta sir. Sir, you're not audible.
You're on mute.
Sorry, am I audible now?
Yes, sir.
First of all, I would like to thank SRSB board to invite me for this event, that I could deliberate this event and host. And secondly, I would like to thank the CA Anuj Goyal sir, our senior council member, for their constant guidance to each and every one of us. Now, with this, I would like to introduce CA Prakhar Gupta ji, our esteemed speaker for this session. Prakhar Gupta ji is a senior sustainability professional and leads the ESG advisory practice for Incorp Global, a Singapore headquartered advisory and compliance firm. Prakhar is also a chartered accountant and an MBA from the Indian School of Business. He is an ICAI certified BRSR professional and GRI certified professional. Prakhar Gupta ji is empaneled as a special invitee member on Sustainability Reporting Standard Board SRSB of ICAI. He is currently working with 80 plus listed companies on ESG and sustainability. I would like to thank Prakhar Gupta ji for giving this session and for accepting the invite. So thank you so much, Prakhar Gupta ji. And I would like to invite you that you can initiate the session. Thank you.
Thank you, CRC, for a very wonderful introduction, and I would like to also extend my thanks to CA Anuj sir and CA Amanji for hosting the session and giving me the opportunity, especially to the SRSP board and the SRSP office, to give me this opportunity to speak on one of the most prominent topics of the time, which is CBAM right now, and it is concerning to several business fraternities, and with the dates coming closer in terms of the implementation, it is becoming more and more relevant and impactful in terms of the other topic. So in a very good morning everyone for joining the session. Let me just quickly share the screen and then we can start the session. Harshi, can you just confirm whether the screen is visible and also the audio is clear?
Yes, sir. Yes, sir. Audio is clear. Even PPT is clear.
Great. Yeah. So CBAM, or carbon border adjustment mechanism. So the the way we will move forward is we'll start with the basics. We'll start to understand first that I'm sure for most of us on the call and on the session, even the carbon accounting itself is a new term. So we'll start with opening up the layers from the very heart of the whole problem, which is why we are talking of carbon today, why climate change, why carbon accounting, and then we move closer to the topic, which is the CBAM, and we'll start discussing about the CBAM. What do you mean by CBAM? Why, how it is implemented? Why EU is doing so? What it is doing, and then we will also drill down into how the calculations are made, so how the whole mechanism works, what calculations you have to do as a business, and you have to enable the business to do the calculation. And then eventually at the end we will discuss the impact which is it is creating on, or it has the potential impact it can create on the business in India, both on MSME and non-MSME business sectors. So moving on to the first part of the story, which is whether the climate change is real, I think everyone on the call will be agreeing with me and seeing the changes on climate happening in India, outside India, surrounding India. There are a lot of evidences which are showing that the climate change is real. There is a big impact happening on the climate. There is a constant global temperature rise. There's a constant global sea rise which is happening, and which is impacting and showing that the climate change is happening and it is real. Recently, Antarctica faced the situation of the hottest day of the century. I mean, of the past 100 years, and that has created a big jolt to the whole world. Wherein I mean, the impact is that if the ice melts, it will impact a lot of coastal countries, and the sea rise will happen. So India is not, I mean, away from the whole impact. In fact, we are very close to the impact. We are seeing a lot of heat waves going on during the summers, during the rainy season going on. As of now, we have seen immense impact of the rainfall happening in across part of the countries. We have seen the impact in Bangalore, you have seen the impact in Mumbai, you have seen the impact in north, south, everywhere. I mean, I don't think any part of the country is untouched with the impact of rain, which has recently caused a lot of impact on flash floods, lot of distress on travel and also and so forth. So uh, India, as I said, is also having a big impact, and we have a big cost of climate change. I mean, if you see on the graph, it says close to by 2050, if we don't act, we will be losing close to 9.87 billion worth of revenue in terms of 9.87% GDP in terms of the revenue. That will be a big fall, which will impact the country at the large. What is the most contributing factor? I think the carbon is the most contributing factor, and there are a lot of evidences which suggest so, and which link the carbon growth or carbon rise into the climate with the climate change. So the carbon has, I mean, if you see the graph since the graph shows a big history of carbon change, and the way it has been impacted. So almost the growth is vast, and if you see the core data or the ICE core data, the impact is happening at a very faster pace, and it is showcasing that the carbon ppm is on the rise in terms of the environment. So the contributing factors are largely industry revolution, the CO2 equivalent which is happening because of industrial revolution. Our human activities are causing a lot of carbon emissions while in our day-to-day operations and our day-to-day working. So the responsibility lies with both, not just industry, but also with individuals as the choices which we are making and the impact it is causing to the environment. So carbon, as we conclude, is the biggest factor which is causing this up. Now, how do you calculate? So the term which is known as carbon footprinting, when you say that you have to calculate the carbon, you have to identify the impact of the carbon. What you are doing is you're doing the carbon footprinting calculation on ground, which means you are calculating the amount of carbon dioxide and other greenhouse gases. So when you say carbon equivalent, it is not just the carbon, there are other gases which are involved, NO2s. There are 5 other gases which you are calculating, which is having a similar impact. And what it is doing is it is trapping the heat into the environment. So as the carbon grows, the heat will get trapped more. So the sun heat enters into the earth environment, but due to the carbon layer which is happening in the environment, it is not being able to reflect back, and which is causing a tapping impact into the environment, and a lot of heat is getting trapped into the earth's atmosphere, which is resulting into the rise of temperature. So that's the core of why we are talking of CBAM and why Europe is taking these measures, because they have identified since long that carbon is the most impactful thing which they want to control or they want to regulate on. Now, we have broadly understood the concept of carbon footprint, but before moving on to the carbon border adjustment mechanism or CBAM, there are few more layers which we have to cover. The first and foremost is the whole concept of carbon pricing. So now we know we have calculated carbon, but what about it? I mean, it will not have any potential impact. Uh, since till the time it has a financial impact, there is a little hue and cry happens into the environment, and people will not even recognize it as an impact. So the whole concept of carbon pricing was introduced globally, and there are several countries which have already taken the stand of putting a carbon price on the top of carbon emission. So which means that either in the mode of tax or in the mode of subsidy, in the mode of positive or a negative impact, the countries are coming ahead and then putting the cost of carbon onto the product, so which is known as carbon pricing. So it is a concept similar to your a known concept of Pavogian tax. So wherein I'm sure most of us, I mean all of us have done our economics, and as a part of economics we would have seen this macroeconomic curve, which is the equilibrium, showcasing the equilibrium of the negative externalities. So without the impact of negative externalities and with the impact of cost of negative externalities, so when you add the social cost on the top of the private cost, it gives you the true equilibrium of the product or of the supply and demand, and that's where the carbon pricing and the carbon tax comes into the picture. The idea is to add the social cost of carbon, which is happening into the product. So apart from just the financial cost, you're also adding the carbon cost, which is happening because of the product which you're buying and selling. The cost of carbon is added on the top of it, and then you realize the true potential of the market, which is where the price are, and then should be the potential supply and what should be the potential demand of the product. Now, the carbon mechanism and carbon pricing can have multiple modes of implementation, and that's the worldwide scenario in terms of how various mechanisms have already been implemented. The first is, if you see on the top, it shows the way of implication. Either it is in the penalty form, it is in the reward form, it is mix of both, reward and penalty form. So you could either give a positive incentive of doing good things. So if someone is doing good, let's say they are trapping the carbon, you will pay them more or you'll subsidize them more, which is more of a rewarding version. The penalizing version is you will charge higher tax on the product which is having higher impact on the environment. So that is the penalization version. And then on the Y scale, you'll see pricing and market based. The two are again the two versions of how the implementations happens by the government. So it can be either a pricing mode wherein you give a constant price or a constant tax on the product, or you leave it up to the market. There would be buy and sell which is happening, which will make the both rewarding and penalizing and synchronize it into the structure. So the example of the first part, which is the penalty and pricing structure, is the carbon taxes. So you have seen a lot of versions of taxes being implemented on the product level, and these are the product level device. Like for example, the coal cess, which is there applicable in India, wherein you buy the coal, the industry buy the coal, they pay the coal cess, and the coal cess is largely being implemented with a mindset of taxing the carbon element into the coal. So that is a kind of a tax which has been implemented on the coal part. Similarly, on the reward and penalty, there's mechanisms known as ETS or emission trading schemes, wherein you give a lot the upper cap of emission. Let's say as a country, you'll only allow 100 metric tons of emission, and you distribute these in terms of the credits or certificates to the companies. Now, if any company is doing more emissions, they have to buy more certificates from the people who are doing less emission. So eventually they have to subsidize themselves by buying these certificates. So a similar example is there in India, which is not very, a close case, but then there is a very sort of like-to-like case, which is known as PAT scheme, Performance Achieve Target scheme in India, wherein the companies which are emitting pollutions or emitting emissions because of power plants, they have the target to switch towards renewables. Government set this target. If they are unable to do that, they have to buy credits from the companies who have already switched over and achieve the targets, and they have generated the credits. So these kinds of scheme work on market basis, wherein you have a market, you have established a market, demand and supply will happen. Someone who is doing less emission will sell its credit to someone who is doing more emission. The third version is reward only scheme, wherein you are just generating the positives and you are selling the positives. Like for example, let's say a carbon credit mechanism, wherein I have set up a big plantation, a big mangrove plantation, and because of that I'm trapping a lot of carbon, and because of that I'm generating the certificates and I'm selling that certificate. So it is only a reward scheme. There's nothing penalizing which is happening in the scheme. So only the reward is sold and then bought by the companies which wanted to subsidize and wanted to show that they are doing good for carbon. So that's how the carbon pricing usually happens into the market. And these are various modes or mechanisms through which the carbon pricing is operated. Worldwide, you will see a lot of examples. And the companies which are in, the countries which are shown in red has already implemented carbon tax. The countries which are in dark blue have already implemented ETS, or there are certain countries which have already implemented both the schemes. Like, for example, if you see the European regions, they have already implemented both the schemes. They already have a ETS and they are already launching carbon tax, which is in the form of CBAM. So they're already on the path of implementing both of these aspects. India also, there are few regulations which are already out. Like, for example, coal sales, as I said, which is type of a penalizing version. You have PAT schemes, which is type of a mixed penalizing and reward version, wherein the traded certificates can be traded and bought by the companies which are doing more emissions. So you have carbon credit trading scheme, which is on the cards right now with the government. They've already come up with the first draft, and they're working on coming up with a final version of this regulation, wherein they will operationalize the whole carbon credit scheme and carbon trading scheme within India. They've already set up a regulatory body which will regularize all these carbon credits and then certify the carbon credits which are generated. We already have a law on renewable energy certificates, wherein the solar farms can generate renewable energy certificates and then they can sell it off on a price. So these are some of the examples which are already showing the elements of carbon pricing in India as well. With respect to the questions, I think we'll hold the questions for now, and then at the end of the session, you can submit your questions to the office, and office one by one will shoot the questions to me, and I will be able to answer those questions. So moving on, in terms of varying carbon pricing. So what also happens is, country by country, because every country has their own set of mechanism, vision, and the demographics, the value of this carbon pricing varies. Like, for example, if you see the average carbon price, which is prominent across the globe, is $32 per unit of emission. And when you say per unit, it is per metric ton of emission. But the range which is required is $40 to $80 as per the Paris Agreement requirement. So if you want to achieve the targets of Paris Agreement, globally, the world has come up with a number of somewhere between $40 to $80. Now, there are certain companies which have already exceeded these targets. And if you see, most of these are European countries. Uruguay, Switzerland, Sweden, Norway, Finland, and so on and so forth, wherein their carbon pricings are dealing in numbers like $116 to $100 in Finland. So that's the spread in which these countries already operates in these domains. And for example, now what it also translates is the ETS which is being sold in these countries are charged somewhere around $100 to $150 per unit of that certificate. So they have already exceeded the targets of Paris Agreement, and there are certain countries which are on the edge. Again, you will see a lot of examples in the same set of countries wherein European countries are taking the lead, and they are already on the average of meeting the targets with respect to $40 to $80 of the pricing. And then there are certain countries where they are below the target. So the range goes till $9, $8. So if you see Shanghai, Taiwan, China, they are in the range of $9 to $13, which ends up in you happily pay the price and you emit more. So that's the mindset which brings up, and that's why you'll see a lot of emissions happening today in countries like China and India, and which is uncontrolled today because there is no pricing attached to it. And if you see examples in Europe and Sweden, they have seen a lot of reduction in the carbon after implementing these carbon taxes into the market. Now, obviously, the demographics are very different in terms of when you talk of European countries and Indian countries. European countries are largely already have migrated or close to 100% migration on renewable energy sources, whereas India has a lot of reliance coal as of now as well in terms of the energy mix, plus the demographic mix in terms of the pricing power capacity and other demographics. It is very difficult for the countries like India to reach out to that level and implement this high cost of carbon. And we'll discuss this impact later also in the slides when we talk of the impacts of CBAM and link everything back to what we are talking to the CBAM. Now, if you see from a macroeconomic perspective, and people who have already gone in detail on the economics front of the story, both have the similar impact. Either do you go on the carbon tax methodology or you go on the emission trading scheme methodology. Both have the similar impact, and this this image shows it and depicts it very well. So, for example, you take an example of as a country, let's say India fixed the carbon tax on $30 per unit. Now, what will happen is automatically the carbon emission will settle because of the emission, the equilibrium curve at, let's say, a value of 100 metric tons of emission at the global level or at the country level. Now you take it the other way around, wherein the emission trading schemes are launched, and what now government will do is they'll fix the maximum emission they are willing to uh, to happen into a given period and in India. So they might fix up the same way, they will fix up the value of 100 metric tons of emission during the year, and then they distribute all the certificates and targets within the country, which means that automatically the equilibrium will form at the $30 value, because the market, either you fix x axis or y axis, automatically the equilibrium will settle at the same value. So globally, what it has been observed is both has a similar impact. Either you go with a carbon tax mechanism or an ETS mechanism, both has the similar set of impact. The cost get translated to the consumers at the end, and then which impacts the supply of the product, which impacts the demand, eventually demand of the products, and the demand goes down. So that's how the whole process of carbon tax and carbon pricing mechanism works. Yeah. Now this also leads to a new issue. I mean, which most of the countries, especially the West countries have done, and then the impact has caused in the Asian countries, is the whole concept of carbon leakage. Again, this is the follow-up concept of carbon pricing, and what we have seen is there is a lot of variation of carbon pricing within the country. Like, what it also opens the door with respect to the globalization is countries and the manufacturers and the buyers and the industrialists within the countries which has higher emission will start looking for options which has lower carbon pricing, lower carbon taxes, in order to shift their manufacturing processes, shift their processes which emits higher carbon to the locations which has lower carbon pricing, right? And that has happened aggressively. If you see in the last decade or so, a lot of manufacturing plants have been shifted to the countries, Asian countries, especially in India, Philippines, Vietnam, Singapore, Sri Lanka, uh, China. You'll see a lot of production is happening in these part of the world, and most of the suppliers or most of the customers of these part of the world is Europe and the Western world. So what they have done is they have tied and done the carbon leakage concept. They have just passed on the bad impact or the carbon impact to the countries where the pricings were lower, and that's why you'll see a lot of carbon rise or carbon emission increase happening in these part of the countries, and that is because of the carbon leakage mechanism which is happening. So if you see, even in India does a lot of export to European and Western countries today, and it is largely the products which have an intensive carbon sort of boundaries, like for example, iron and steel manufacturing, the cement manufacturing, and so on and so forth, which is having the higher impact of carbon. So that's how, I mean, the whole carbon accounting to carbon tax and the carbon leakages is linked, and which then brought or give the life to CBAM as a concept. So when you say CBAM or carbon border adjustment mechanism, on a very high level or the concept level, what the EU is trying to do is they're trying to ensure that this leakage is reduced, basically. So they want to ensure that whether the product is being manufactured in Europe or outside Europe, whatever is landing in Europe has the same impact of carbon pricing which has happened onto the product. So what it will also do is it is sort of an adjustment levy which they're trying to set up or trying to bring into the concept. So moving on to the concept, which is in detail, which is CBAM or carbon border adjustment mechanism. So largely what they're trying to do is they're trying to achieve their objective of Fit for 55 package. So they have announced a vision of 2030 wherein they are saying they want to reduce the emission of to 55% with respect to the year 1990. So, and largely internally scope 1, scope 2, which is the direct emission, they have already controlled a lot, and they're because their companies are paying a very high carbon pricing into the markets. Largely, they have controlled their local emissions in terms of what they're emitting today, and what they're now targeting is the emission which is flowing into their country in terms of products, in terms of the products which have been sourced from outside and sourced from the suppliers or the countries which are selling into EU countries. So what they're trying to do is they're trying to introduce CBAM, which is they're showing it this as a fair price mechanism, wherein because the country has taken a lot of initiatives, they are doing a lot of good on the carbon perspective. They want to ensure that their local industries doesn't get a hit, and that's why they are trying to bring in this adjustment levy, wherein if you are buying or importing any product from outside, they are wanting to ensure that at least the carbon pricing are on the similar lines. So that's where what they're showing is it as a fair price mechanism which they have brought in. It is largely applicable on the carbon intensive imported goods. So they have done their studies and they have come up with currently six set of sectors which they believe as the most carbon intensive sectors, and which is creating a higher impact and has a potential of creating a higher impact into the value chain. They are also trying to encourage the cleaner industry production in the non-EU countries. So this is one of the mechanisms. So till the time wherever I showed you carbon pricing, carbon taxation, most of these taxes were within the boundaries. It is not crossing the boundaries. No countries have yet introduced any import levy or any specific cross-border levies with respect to carbon accounting. Most of these taxes or the pricing or the promotions which we have seen were largely local in terms of the implementation. This is first of the example wherein they are trying to bring in the implementation even to the non-EU countries, and which is also causing a lot of hues and cries into the market currently. People are saying how it is possible, how a country can levy and impact taxes on across the concept. I think there's a question. What are the key compliance requirements of CBAM that Indian needs to be aware of? I will come to that. I think I have covered that in detail in terms of what CBAM and what are the compliances we have to consider while doing the CBAM accounting. So I will come to that at the end of the, in the next part of the presentation. So basically what they're trying to also do is they're trying to set up a carbon price of the import, which is equivalent to the carbon price of the domestic. So in short or in crux, that is the summary of what they're trying to do. They're trying to identify a price which is equivalent of the domestic pricing, and they want to ensure that all the product which is imported into EU has the impact of the same price or the same carbon price. Now, what is the aim? Aim is largely to prevent the carbon leakage, and as the concept we understood a few minutes back, largely what they want to do is the practices which the European countries and the companies in Europe are following. They want to put a curve on this practice. They don't want companies to blindly just import because the carbon pricing and the impact of the emission is lower in these countries, in the countries from where these European companies are importing. So that is the first and foremost sort of aim of CBAM. The second aim is also to complement the EU ETS. So as I said, Europe is already has a ETS scheme, which is known as emission transmission and emission transition scheme, wherein they're promoting these certificates. They are keeping the caps within the country, where above this cap, the industries are not allowed to do emission, which is the local emission in terms of their production, in terms of their manufacturing. And because of that, they have to buy these certificates, and this has a price. So what they want to do is they want to complement it, and they want to reduce down on this whole impact. They also have internally set up certain subsidiaries wherein they are promoting some small companies and small sector industries, and they are giving subsidies. They want to also reduce down on the subsidies and earn from CBAM so that they can invest into their countries and also promote the overall concept of the carbon reduction across the globe. So they have a goal of carbon neutrality by 2050, and they want to get money out of this whole thing, and this will help them to invest more in terms of these initiatives to achieve the whole decarbonization objective. They are also trying to aim the CBAM and link it back to their decarbonization drive. So that these are the three major aims of CBAM which EU has announced. Now, what are some of the features of CBAM? The first is it is a mirror EU carbon pricing. So basically, as we just now said, it is something which is mirroring the carbon pricing. What currently carbon is there, they want to mirror the carbon price. Very unique thing, which is the second point of this whole story. You'll see countries implementing till now the taxes were implemented at the country level or at the product level. Usually, for example, in India also, you'll see anti-dumping duties are being revised at the country level, wherein they say anything coming from China, any specific product which is coming from China, you will have to pay this much amount of money as an anti-dumping duty. You will have ad valorem taxes, wherein these taxes are applied to the product level categories. This is something which is very unique, which CBAM is trying. What they're trying to do is they want to directly go to the level of company which is selling that product into the EU, and that the tax is being implemented at the company level, which is at a most micro granular level. They are trying to tax, and the variation will happen based on company to company. The sourcing to sourcing, the cost of the tax or the CBAM will vary based on how the whole product has been manufactured by a specific given company. For example, Jindal, if selling steel, and let's say some other company is selling steel, the value of CBAM will vary based on carbon impact of Jindal versus the other company which is selling the steel. And that is where the tax is being brought down to the company level, and they want to implement it, they promote the companies which are doing good on that. So that is the very unique thing which CBAM is trying to bring in. The third is also with the alignment of, so what they are also claiming, this whatever they have done is this is an alignment with WTO. Although several countries are already contesting this, China has already blocked the contest with WTO. India is also planning to do that. But EU has already claimed that whatever they have done are under the boundaries of WTO right now. So that is again one of the claims which they have made, that although it is taxing the international border, but they are under the regulations of WTO. The fourth is also on the focus. So largely the focus is on the carbon intensive sector. And last, and which is complementing point number two, which is what they're trying to do is they're trying to narrow down the boundary of this of the visibility of the carbon. They want to narrow down it to the level of goods and level of manufacture of the goods, and from where their goods are being sourced, whether they are sourced from the right sources or not. So that's the feature of largely what CBAM is trying to do. Broadly talking on the advantages, the first is on environmental benefits. It will ensure, it will push supply chain across the globe. It will, if you want to be competitive, you have to adopt these green measures and become competitive, and there will be a competitive drive which will start. So it will encourage the whole sustainability supply chain practices. It will also sort of target to reduce down on the carbon leakage concepts a bit. I mean, once the EU proves everything is going on track, I'm sure there are other countries and other regions which will come up with similar set of tax mechanism, and they will also start building the barriers in terms of ensuring the carbon leakage is lower. So, I mean, it has a very large environmental benefit, I would say, but then it is also having the large economic benefits. And on the other way around, I mean, although we are talking of advantages, but then it is also uh, de-promoting, and we'll talk in the next slide, that it is de-promoting the developing country, that is it is impacting a lot to the developing countries and developing nations. So, and on the regulatory benefit, largely it is strengthening the climate policy for EU. They are setting up the global standards. They are doing a lot of techifications behind this. They have already brought a portal which will ensure all these entries are all seamless, and without a face, the whole assessment can happen. And also a lot of regulatory push internally the EU is doing with ensure that everything is smoothly implemented when they implement this. Talking on the disadvantages, and largely this is with respect to the Indian market, and we will talk more on this at the end of the topic, wherein we'll talk on the impact of Indian businesses. But largely the disadvantage includes discrimination against developing countries. I mean, if you see the list which I showed you, most of the countries which are doing good on current carbon pricing, carbon emission, is mostly the EU and Western countries, wherein they have started early, they have cleaned their houses, they are mostly on renewables, they have pushed all their dirty works in the countries in the Asian part of the world. Uh, Now what they're doing is they're trying to build the barrier again back, so which will impact a lot of developing countries which have not geared up to that compliance level. There is a difficulty of collection of the data. There is a difficulty of calculation of these things at a micro level and at the corporate level. And also they don't have large pockets to implement a lot of renewable or take renewable initiatives at this stage. So that is the first thing. Second is imposing additional burden in terms of compliance burden, in terms of regulatory burden, in terms of process burden. It is imposing a lot of burdens on other countries, especially on the developing countries, because developing countries don't have those good mature systems in place to track and monitor all these data which is required for the CBAM calculation. The third is also largely on the contradiction. As I said, there is a already dispute which is happening, and it just started happening as the dates are getting closer and closer on the implementation. Already the couple of rounds of report publications already happened on CBAM, but uh, uh, there are several countries which has lost their concerns on these laws. So there is a contradiction which is happening. And the last is on the complicated implementation. Again, I will talk this in detail in the next part of the presentation, wherein I will show you how the calculation is happening on CBAM. And it is not as simple to calculate CBAM. There are a lot of complications which are built in order to do the calculation. So it is also a bit of complex calculation which has to happen before coming out to the conclusion, coming out to the output. Talking on the timelines, largely, so what the whole process was started in July 21. They proposed a framework. As I said, it was linked to Fit 55 goal of the EU nation. They have converted into a legislation in 2022. They have launched it. They have produced it into the parliament, and then by 23 it was adopted, and it becomes a regulation. And the first phase of transition, which was announced, was October 1st, 2023. So this was the beginning phase of the whole transition. So the first phase started in October 23, and it will go till December 25. That was the whole process. It's going on right now. During this process, the importers who are importing few of the materials, in terms of few of the areas of materials they're importing, they have to publish the CBAM report on the CBAM portal, and exporters who are exporting from non-EU countries have to submit the data to the importer. Importer will submit it back to the portal. From 26 on, so currently there is no financial implication till 2025. From 26 onwards, the financial implications will start kicking in, wherein you have to do the financial calculation. The importer has to also pay on a quarterly basis the excess carbon he has imported into the country. And by 27 onwards, they're also envisaging the expansion on new sectors, expansion on new areas, into the whole process. So that's the timeline, broad timeline in terms of implementation. Right now, the point to note here is this current phase which is going on, which is October 23 to December 25, which they call it as a transition phase or the preparatory phase. These are the sectors on which the implication has already happened. Implementation is already happened. So the first sector is cement, second is iron and steel, aluminum, electricity, fertilizer, and hydrogen. These are the 6 sectors which EU has picked up and implemented CBAM on these sectors. And what they've done is they've picked up they've gone at the export or import, the code level, which is the CU code level wherein the implementation has happened. So they've picked up the export import code, and they've identified which products or which product codes will go, tariff codes will go for this implementation. So the any import which is happening in those tariff codes have to apply for CBAM and has to submit the report on a quarterly basis and so on and so forth. So largely these are the sectors which are currently impacted due to this implementation. What do you know? I mean, what do you mean by transitional phase? Current transition phase is going on from, as I said, from October 23 to December 25, and there are basic things which EU is asking right now. The first is understanding the whole concept, roles and responsibility. What is the role of exporter? What is the role of importer? What is the role of regulatories? What is the role of the custom in the EU, and so on and so forth. Second is on the collection of information. So what EU is trying to do is they want to collect as much information as possible, so that they can mature when it comes to implementation of pricing. They get the mature information by the time. So 3 years they'll collect the data, and then they will come up with the pricing in terms of the adjustment pricing, which they will announce by 26, which will get implemented and has to be paid by most of the countries which are doing the export. And last is on the smooth rollout. So they want to ensure that this transition phase is used so that by 26, all the glitches have been cleared and you get a smooth rollout happening by 2026 onwards. What report contains right now? It contains the quantity of goods imported. So usually the value is in terms of either tons or kgs or metric tons, and depending on the product, or gallons and so on. So depending on the product which is being exported, the unit of the goods which is imported in EU is identified. The next thing they are trying to identify is the embedded direct and indirect emission. We will talk in detail in the next slide when we discuss the calculation. That what do you mean by embedded carbon emission? But what they are trying to understand is the embedded carbon emission as a second part of this report. And the third is carbon price due. So at the back end, they've already started doing this calculation that how much carbon price will be due from which part of the world and on which product the carbon pricing will happen. So what is the carbon price implication which will happen? So this is what they're trying to identify. Currently, the CBAM report has to be submitted quarterly. So if you're exporting anything to European, which is out of the 6 sectors which I mentioned, your importer will ask you to submit this report on a quarterly basis. So every quarter you have to update the CBAM report, submit it to your importer, and he will upload this into the CBAM portal. And then once he uploads, then only your imports will start flowing into the border. So they have already put a check wherein they will block if the CBAM report is not being updated. Verification right now is not mandatory. Neither EU is doing the verification, nor they're pushing the source or the exporters to do the verification. But there's also a talk of coming up with a verification on all of these calculations. The post 26, we might see even EU announces the mandatory verification, third-party verification on this data which is being submitted by the exporter, which is not mandatory right now.
And the last is on the modification of the submission. Right now they are allowing, so you have to submit this report on a quarterly basis, but you can modify the information. So if anything has gone wrong, if you feel that a number is not correct, they will give you a post the submission deadline 2 months to update the value or update the information if anything has gone wrong. So that's the transition phase currently, how it looks like in terms of the implementation part. Now, what is the process of reporting? If I have to summarize in terms of how the reporting has to happen, uh, as I said, exporters from non-EU countries will submit this report, CBAM report, on a quarterly basis, and it's an standard Excel template in which the report has to be submitted to the importers from the EU, and it has a lot of information. It's a very detailed template wherein the code of the product, the tariff of the product, the various types of emission the product is creating, embedded to the product. It has to be mentioned into that CBAM Excel sheet, which has to be submitted to the importer in the EU. EU importer will upload this in the combination of the product code and the exporter in the CBAM portal, and then custom authorities will validate it and then approve the upload which has happened. So that's the process right now which is being followed with respect to the submission of the CBAM report to your importer in Europe. So largely, if you see the roles and responsibility, it is the responsibility of the importer to pay the tax. Eventually, the responsibility will only come to the importer to pay the tax. It is not on the exporter to pay the tax. So we will only be, it's a normal course of export which we will do. But because the carbon impact or the report which you are submitting, CBAM report, if it has a higher carbon emission, then the importer has to pay higher tax. That's the whole mechanism. These are some of the dates which are already being announced. So first date, which is the first submission, has already been passed. In Jan 31 was the deadline to submit, and they have extended the modification deadline to July 31. The next cycle, which is Jan to March, has also been concluded on March 30th. The second report was submitted. On April to June, this cycle is also concluded. Right now, July-September cycle is on. So wherein the fourth report will go from the importer. So whoever is importing, they will submit their fourth report right now into the CBAM portals. And then the following deadlines are there in terms of the date of publication or of the report. Now, what will happen post 26? So we have understood everything till post 25. Now, what will happen post 26 is this complicated calculation. I will try and simplify this in the subsequent slides to how do you do this calculation. But this is what the calculation looks like. The first thing what they will do is, and this has to be announced by the exporter, is what is the actual embedded emission. This is the responsibility of the exporter to announce. So, for example, Jindal, again taking the example of Jindal Steel, if Jindal Steel is selling their steel roll to the Europe, they have to identify the embedded emission which is there in that steel roll which they are exporting, and communicate it in the form of the CBAM report to the importer. Our importer will upload this, and what the calculation portal will do is it will identify whether there is any free allocation given to their importer. So whether that importer has a quota, so that quota will be reduced first. Once the quota of emission is reduced, he will the whole calculation will get multiplied by the amount of goods. Let's say what you will do here is you will give a per metric ton of emission. So per metric ton of steel exported, this much amount of emission is there, and this will get multiplied with the total export which has happened till now, in that quarter. So that will give you the total amount of emission which is being taxed, multiplied by the EU ETS price, which is the certificate price prevalent in the local market. So this EU ETS price will get multiplied. This will give you the CBAM obligation. So this is basically the cost or the money which that importer has to pay to the authority in Europe. This will get reduced from the carbon price effectively paid abroad. So for example, if any of these goods have already been paid, let's say in India has already come up with the carbon pricing by then, and if the importer and this product has already been impacted with the carbon price in Indian market, they will allow a subsidy, or they will allow the net off in the European market. So you can reduce the carbon price already being paid on this product, and then whatever is left over is you have to pay, or the importer has to pay on the export which is happening from India. So that's how the whole calculation happens. Might look a bit complicated as of now, but yeah, that's largely the process in which the calculation will happen. There's a question: what specific challenge do Indian business and MSME face with the implementation of CBAM? How can Indian companies assess their carbon footprint in compliance with CBAM? I think you have to just hold on for a bit in terms of this question as well. This question is well covered in my presentation, and I will take it at that time when I will explain you the process. Now, we have understood the overall concept of the CBAM, how it has been implemented, who should submit the report, in what format, and what structure the report has to be submitted. If time permits, I will also show you that Excel sheet, one sample Excel sheet. I will show you that how that Excel looks like and what all data you need to submit in that Excel sheet. But let's move on to the calculation of the emission now, because that is the primary responsibility as an exporter you have. You have to calculate your embedded emission in whatever you are exporting. How do you do this calculation? So usually what happens is when you do an emission calculation, there is a concept of carbon accounting which kicks in. And then it is divided into three broad categories. It's a big topic in itself, but I will just quickly explain you what do you mean by carbon accounting. There are three versions of carbon elements which you have to factor into. The first part is direct emission, which is known as scope 1 emission. When you do scope 1 calculation, what you'll do is you'll see all the fuels which have been consumed within your boundaries. Let's, for example, you are running a coke, you are running a burner and you are burning coke in that burner. The coke is a fuel. You are burning natural gas in that burner. The natural gas is a fuel. So whatever in terms of fuel you have burned, that needs to be accounted for. It can be within the stationary plant and machinery, like for example, as I said, burner, which is a stationary plant and machinery. It can be a DG set wherein you are burning the diesel to generate electricity. That is a stationary plant and machinery. There could be non-stationary machinery also. Like for example, company owns vehicles and you use diesel and petrol in running those vehicles. It could be trucks, it could be cranes, it could be passenger vehicles and so on and so forth. But if you're owning a vehicle and running the vehicle and consuming fuels in those vehicles, that becomes a scope 1 emission. It could also be in form of gases. Let's say, for example, you are refilling the refrigerant gas into your AC, you are refilling CO2 in your fire extinguishers. So these gases also have emissions. So this is what it is known as the scope 1 emission, which is the direct emission. It is also known as the direct emission of your operation. The scope 2 emission is indirect emission, a category of indirect emission, which is largely the power you have bought from outside. So for example, you bought electricity from outside. The grid in India, for example, you're buying the electricity from a grid in Mumbai, which is consuming coal while creating that electricity. Most of the grids are thermal grids in India as of now. And if you're buying from a thermal grid, already there is an emission which has happened in generating the electricity. You have to account for it. So that is scope 2 emission. The third category is scope 3 emission, which is the value chain emission, right from other elements which you are using into the production and which is outside your factory premises, outside your control. All the emissions in the value chain. Let's say, for example, you are buying raw materials to manufacture your product. Let's say to manufacture steel, you bought iron ore. So emission which is there in the iron ore has to be accounted for. The iron ore was transported through a transportation vehicle from iron ore location to your factory location. So emission that has to be accounted for. The employees are commuting from office to home, home to office. So emissions has to be accounted for. Business travels are happening. A lot of business travel, flight travels are happening by the employees of the company to ensure the business is running smooth. So they go to, let's say, attend a sales meeting. They go to attend a customer, client, and so forth. All the travel which is happening has to be accounted for. So similarly, there are 15 categories divided into upstream and downstream. So whatever I told till now was upstream. Similarly, you'll have downstream. Your final steel generated has to transport to the location. So let's say the same steel, you have to put it in a truck and then ship it through a ship and then export. So all the emission happening in the transportation is in downstream emission. Similarly, your product will have an end of life. The steel will see the end of life. There is an emission trapped in the steel. Once it is sort of put into the scrap, what happens post scrap and how the end of life emission has to be accounted for. So these are various categories in which the emission is accounted. But what CBAM has done is they have not followed the exact same carbon accounting methodologies. They have come up with a different version, a slightly simpler, this is more complicated version of doing the carbon accounting. They have come up with a more shorter version, I would say a crisp version of doing the carbon calculation or embedded carbon calculation. So I will divide it in the same part. You will have company production, you have downstream, you have upstream. In company production, you have to account for the direct emission. That is for first part. You have to do that. So let's say assume a factory. I will take an example also to explain you in detail what and how the calculation has to happen. But let's assume you are running a factory, and within the factory you have consumed the fuels which I just said. You have a DG set. You have a coal power plant. You have a burner wherein you are burning the fuel, and you are having chillers wherein you are putting the refrigerants to do the chilling and so on and so forth. So all the direct emissions has to be accounted for first. So you have to do this calculation at the factory level, account for all the direct emissions first. Second is indirect emission from scope 2, which you have to account for, which is electricity which you're buying. So if you're not generating electricity on your own, you're buying from outside, you have to account for the emission which has happened due to that electricity consumption which has happened during that period in the given set of boundary, which is the factory. Now in scope 3, only you have to account for the product which itself is a CBAM product. So let's say, for example, a company is only doing the steel rolling as a process. They're not even manufacturing the steel. They just bring the steel briquettes and they smelt it, they roll it down, and then they create sheets out of the steel. Now their final product is only steel, and they're only doing the limited part of steel rolling into their premises, into their kitty. But iron ore is also a steel product. It's also a CBAM product. Steel itself is a CBAM product. So what they have to do is they have to account for, go back to the supplier and ask the emission which has happened at this product level on the specific set of machineries. Let's say, for example, how much coal was burned, how much natural gas was burned in the furnaces when the smelting was happening for the iron ore, when the refining was happening for iron ore, how much of these emission has happened at that level. So that is the complicated part of CBAM calculation, wherein you have to go back and ask the supplier to disclose these numbers to you. And this is also the most complicated part for the MSMEs, largely because MSMEs only deals with the in the later part of the product. Let's say they might be making handicrafts out of iron steel. They might be making certain products out of the steel fabrications they are doing. They are creating products out of steel for auto parts and so on and so forth. So mostly, largely, the MSMEs are dealing in the last section of the whole process. And what they have to do is they have to go back to the suppliers and ask this data in order to do the calculation of the product which they are selling to the exporters. So that's where the complication starts. But that has to only happen for the products which are under the CBAM boundary. You don't have to ask your, let's say, while doing this process, you are also consuming certain chemicals. You don't have to ask the chemical exporter right now, or the person who was selling you the chemical, the carbon impact of the chemical. You have to only do it to the level of the product, which is also a CBAM product. So that's where the complications start first. You don't have to account for any downstream emission. So only upstream emission you have to account for, and the company production emission, you don't have to account for any downstream emission. So any transportation, anything is happening post your factory gate, you don't have to account for. So that's the CBAM boundary right now with respect to what the calculation has to happen. I'm sure it's a bit complicated. I will just hold on for a minute on this slide. If anyone has a specific question on this slide or last slide, they can ask, or we can move on. Great. So let me just move on. Now, before moving on to the calculation part, I think we have to also understand a bit of the concepts and the terminologies which are used in CBAM calculation. The first is simple goods versus complex goods. So I think I've already touched upon this concept when I was giving you the example in the last slide. The simple good is a good which doesn't have a consumption of a CBAM good itself. So it's a raw material in itself. Let's say, for example, iron ore is a simple good because it is not consuming any pre-material which is also CBAM material. So it's a simple good, and usually it has a zero embedded emission. You don't have any embedded emission. Embedded emission means the scope 3 emission, which just now I showed you in the last slide. So that emission, scope 3 emission, is zero for the product. That is a simple good as per the definition of CBAM. And what do you mean by complex good? The other way around, which is, let's say, the material which is having the embedded emission of a CBAM material. Let's say, for example, crude steel, which we are manufacturing, pig iron emission process. The process of manufacturing pig iron emission is already embedded in crude steel, which makes it a complex good. So whenever there is a complex good, you have to ensure that the calculation also covers the embedded emission. That is the first concept, which is simple good versus complex good. The next concept is the production process concept, wherein you have to set up a boundary. So what, let's say again an example or a scenario wherein you have two factories and you are manufacturing the same set of product from those two factories. But in one factory you have solar installation, other factory is taking the electricity from the grid. Now you have two different set of processes, two different set of production route through which the manufacturing is happening. So what you have to do is you have to first define the boundaries clearly with respect to the product you are selling to the European Union. So you have to link it or tie it back to the product which is getting exported. If the product is getting exported from multiple routes, you have to calculate the emissions from all the multiple routes through which the product is being passed through, or thus the final total product is being passed through. So that's how you have to combine. So what do you mean by production process? It is the process of manufacturing is happening. And what do you mean by production route? It is the route through which the final good is being manufactured. So what is the route it has taken? It has, let's say, it has been manufactured in a factory in, let's say, Vapi, or it has been manufactured in a factory, let's say, in Vivandi. Your production and route will be different. Your emission might also be different. Hence, you have to do the calculation at the production route level. Last is on the aggregated goods category, wherein so let's say, for example, I'm a seller and I'm selling articles made out of steel, and I have hundreds of SKUs which I'm selling. The calculation only has to happen at the aggregated good category level. So EU has also announced the aggregated good categories, which looks something like this, wherein you have an aggregated good category, you have a tariff code, which is the CN code, and the description of the CN code. So you can have multiple CN codes linked to one category, and the calculation has to happen at the category level and not at the CN level. So if you are selling multiple CNs in the same category, you can go ahead with the same report and submit the same report. So the question of whether I'm selling multiple SKUs, whether I have to do this calculation every time I sell or buy a product, answer is no. You have to see the category, the aggregated goods category, before taking this call, whether the calculation has to be multiple or single. So whenever you are going to for a third party for this calculation, or you are doing it on your own, you can follow this route in terms of first determining the aggregated goods category. I think there are a few questions. How is the carbon content of the imported goods assessed and verified? What are the mechanisms for cross-border verification? Right now, there is no verification. It is only on Reliance, because there is no calculation which is happening. But there is already a proposed assurance which has been proposed by you that the exporter, while submitting this report, should have a verification done, and the name of the verifier should come on the report. I will show you the report also in a while. The Excel sheet, it already has a column of verifier's name and the details of the verification. So that mechanism will get built out. Right now, it is not there. It is only on sort of your calculation, self-certification mode, the things are on. How would the transit time issue will be addressed? Normally, India to EU transit from factory to port, destination port would be 25 to 45 days. In that case, Indian MSME sold Q1 would reach 30-40% goods in Q2. Same issue with manufactured goods kept in stock. And so basically, you have to submit this report at the quarterly level to the importer, and importer will only feed. So as I said, the value is at the quantum level. So the calculation will be happening at the per kilo level, or per metric ton level of steel which has been manufactured, iron which has been manufactured. Now, whatever import has happened during that tenure, which has already reached the boundaries and import claims have been filed by the importer in the countries, will take the report which has been received in that relevant quarter. Now, if there is a spillover which is happening, the Q2 report will be considered for that filing in terms of the next level of filing. So that's how the process will be. I hope this answers the second question as well. So the report which you are submitting as a report period attached to it. And largely, if everything is largely the same, you are using the same model, same mode, same process of manufacturing, the emission will not vary much in terms of period to period. Only your production will vary in terms of how much production you have done during that period. If the production goes very low, then obviously the fixed factor will kick in, and you might have a higher emission on the products which is exported during that period of time. Now, with respect to the process of carbon calculation, there are 5 steps which you have to follow. Some of the steps I've already touched upon. The first step is the system boundary definition, wherein you have to define a boundary, define a system boundary. When as I said, you have to define a process, define a product, define a period, define what is your boundary looks like, wherein you have to do this calculation. So you will define your route, you will define your process and the product, and then start with that. That is the first step of ensuring the enablement of CBAM. The second is on the monitoring. So once you identify, what you have to do is you have to monitor. You have to right now in most of the companies, what is happening is, and the struggle is, you already know your financial cost of that fuel, but you don't know the consumption which has happened of that fuel. So what you have to start doing is you have to record the consumptions of that fuel of that period and of that process during the period. How much fuel you have consumed while doing that process, and then you have to convert that into emissions. So there are factors which are available. There are three modes which have been suggested by CBAM. I'm not going in very detail of how the conversion will happen because it's a big topic in itself and it will open a big Pandora box. But there are largely three modes in which you can do the calculation. The first mode is at the overall factory level, whatever fuel has been received during the period, multiply it with a factor, multiply it with the carbon factor of the product, and you will get an emission of the period during that period, how much fuel you have consumed. The other factor is the mass balancing method, wherein you have to subtract the input materials versus the output material, wherein how much fuel has been imported or inserted into the product into your factory and how much exit has happened. Let's say, for example, some of the gas you are reusing for some other purposes. There are some materials which are recycled during the process that has to be reduced. But going in again in the complication, it's a bit complicated method. You can focus on the first method, which is the direct calculation at the factory level. Once you do that, the third step is attribute the emission to the product. Now, whatever calculation you have done at the factory level. You have to find ways and mechanism to attribute that production to the granular product level, wherein you can either do that by volume attrition. You can put local meters down the line, and then do that attrition to the process which is contributing to that product. So let's say, for example, in a factory, you are manufacturing certain products which are exported to you and certain products which are not exported to you, and you have a different process altogether for that product. Or let's say a product is manufactured, a handicraft is manufactured with wood also and steel also in the same factory. You might have separate processes consuming the same source of electricity. I mean, you're not monitoring different processes of electricity as of now, which will create a problem for you when you are doing the calculation. So you have to do the attribution at the product process level. And the fourth part is emission of the precursors, wherein you have to identify, you have to go to the suppliers and ask them the question that this is a precursor material defined by CBAM. I want to know the emission which has happened while you're selling this product to me. And again, they have to give a specific emission of scope 1, which is fuel consumed during that process. So how much coal burned or how much natural gas burned, how much electricity burned during the manufacturing of that product, and attributed to the product which you have bought. You have to identify. Last is you have to sum everything up together and bring it down at the product unit level. So during that period, let's say 100 tons of steel manufactured and 100 units of carbon you have calculated at the process level. You divide both of them and you will get 1 unit per ton of steel emission. It's the end calculation you will end up. There's a question which says, what is the purpose of CBAM? I mean, do EU wants to discourage import of these products and encourage domestic manufacturing, as importers has to pay more production in EU due to discourage imports will increase net emissions only. Can you share list of websites which we should refer or will be useful in calculations? In case of steel industry, raw material inward transportation will be part of CBAM emission or is out of CBAM. In case of raw steel, so I'll share with you the links of relevant websites. There's a dedicated portal of CBAM which CBAM has announced, and it has all the required information available. Even the tools, the calculators, everything is available on that portal, which will be very helpful for you. And I've already covered that as a part of the slide. You can take a screenshot of that, and our office can share the slides at the later. To answer the first question, which is what is the purpose of CBAM? So I think I touched upon this at the start of the process. So the purpose is to achieve their net carbon goal, which is carbon neutral by 2050. They have also a target of 2030 to 5% of their emission. Now, what they've realized is the emission is also coming out from the products which are getting imported. So the product which are imported into the country has the tabbed emission into it, which they want to discourage. That is the first thing. The second intention is also to equalize their industry with outside industries. So they have realized that they're seeing crisis. Europe has gone into an economic crisis very recently. There are countries which are going into the crisis. Their local production, local manufacturing is getting impacted. They want to ensure that even that is at par. So if someone is importing, he should ensure that the carbon tax is at least at the par, because there's a lot of push right now into the European countries, and they have spent a lot of money on transiting to the renewables. since almost a decade now, and now they want to sort of ensure that all this should not go in vain and everyone should follow the suit. So these are the two major motives of doing or taking this measure. Obviously, this will have externalities and which they are facing right now. There's a lot of UN guys which has already been started. I'm sure local importers will also start making voices because the cost of import will increase drastically. And I'll talk about it. It is almost an increase of 10 to 15, but 15 to 20% of rise of cost. If the current number continues, whatever numbers are there as of now, if that continues, it is the impact of almost a 20% rise of the cost of import, at least from the India market. So, which means that there is a lot of cost rise which will happen, and importers will also lose a lot of money, uh, which they are making right now by sourcing it from India and countries like China and India. So there is a externality which has already started flowing in. People are coming out and sort of protesting against this law and so on and so forth. But the intention from which the EU has come up with largely, and they have taken such stands in past as well. They've done a lot of pushed a lot of implementations on promoting the carbon positive or carbon neutrality in their region. So that is something which is the biggest intention is they are doing. What I'll do is I'll just hold these questions for now. I think there are a lot of questions that are flowing in. I will answer the questions at the end of the slide. Let me also complete the couple of more slides which will have answers to your questions. Some of the answers are already there in the slides, which I will cover. So let me just continue the slides meanwhile. Moving on to the next part is the sample example. So I've also given a simple example on the 5 steps that just now I showed you. The first step is setting the boundary. So you have a factory, you have set a boundary. Step 2 is monitored. You are monitoring your fuel. Like for example, you're monitoring your coal, natural gas, etc. You are monitoring your electricity consumption. Step 3, you should do the calculation. So you'll do emission calculation of your fuel consumption. You'll do emission calculation of the electricity consumption. Everything is happening at the factory level right now. Now what you'll do is you will also add the precursor. So on step 3, one of the steps which also do is attribute. So once you do the calculation, you will attribute the whole calculation at the process level, which is direct correlation to the product which is being generated. In step 4, you will do the precursor calculation, wherein you will see raw iron, pig iron, emission from blast furnaces and suppliers and so on. So all that emission we will bring in and put it as the precursor emission. In the 5th part, you will add total emission and then define the attributable emission to the product, which is the summation which you have to do to the CBAM portal. So the total emission will be direct emission per precursor emission divided by the amount of goods produced. So total emission divided by the amount of goods produced is what the value which you will submit. So that is a calculation which you have to do eventually. Now let's talk for next 15-20 minutes. Let's give on the impact which will happen. And I think a lot of you have this question: what is the impact on our business? What is the impact on MSMEs? What the government is trying to do? And how companies can prepare themselves for this whole flow of things which are coming in on our way. And already, I mean, I'm sure some of you have started feeling the impacts already. Now let's put the impacts in numbers first. So, and a potential of carbon tax, I've already mentioned, only mentioned 50%, but it has a potential to go to 20-25% in certain cases. So right from 11% to 20-25% is what we are seeing as an impact overall. If the same thing goes through, and in the current scenario where we are right now with the limited amount of clean fuel being used into the process, this is what the impact looks like. And in terms of numbers, currently we are doing a 8 billion business only on CBAM products with Europe. So this is the quantum of impact, which is, and you can calculate the quantum of impact which it will have on the importers in Europe. On specifically on CBAM sector, if you see, it contributes to almost 11% of the total export of the country. I mean, the CBAM products, when linked to the EU countries, we are doing almost 11% of the export is going in these countries. And if you see in the red, these are the 4 biggest impacted sectors. So iron ore, steel product, iron, steel, and aluminum. And if you see tariffs, close to 200 odd tariffs are more than 200, I mean, close to 300. There's just 473 itself. So close to 600 tariff entries are already being impacted, which means that, and the biggest impact is on iron and iron steel sector, which is having 31% export currently, exposure of 31% export. Steel products has an exposure of 20% export. Iron ore has an exposure of 20% export. Aluminum has an exposure of 27% export. And there are some sectors which are low impacted because the export is very low on these sectors like cement, fertilizers, hydrogen, electricity. We are not doing any export of hydrogen, not exporting electricity as of now. fertilizer, just 1% of the export contributes to the fertilizer exports, and cement is very low, again 6% export. So largest impact will happen in these four sectors, first of all. And if you compare this, I mean, what is the economic burden of everything? What will happen? So the first is on the cost pass-through mechanism. So basically what is happening is you will, in both of the scenarios, the impact will be high for the companies in the short run. The first is, let's say, what if we pass on this cost? So we have to bear new costs as a country, right? So first of all, taking the green initiatives at its own cost. You might have to transition to renewables, you might have to transition to cleaner fuels, biofuels, and then it will add up to your cost of productions into the process. You might also have to increase the compliance cost because you have to monitor all these numbers. You might have to put a system in place, you will put a tech tool in place, or you do it manually, you put a resource in place. There's a compliance cost which will kick in, and the data collection cost which will kick in, which will eventually increase the cost of product. So if you do and adopt these mechanisms, there is a rise of product. So on an average, if 15% rise happens, it can impact 10% of the demand. That is one of the surveys just recently published by Economic Times, which says that this is the impact of scale which we are talking about. And what if we don't do, then again it has an impact because it will reduce the competitiveness. So what if other countries have adopted this, and right now if you see, this is what the impact looks like in the Asian market. So India is impacted almost 11%, China 11%, Korea 5%. This is the impact which countries will have in with respect to the higher cost of the product. So if we don't improve, there is a cost. We might lose on competitiveness. If we improve, then your cost of production will increase. Eventually, you have to pass the cost to the exporter, to the importer who is buying. Eventually, he will end up paying the cost. So first is on the economic burden. There is a lot of pass-through cost reduction, the risk of reducing competitiveness, which is increasing because of this compliance kicking in. There are other burdens, like for example, you have to immediately rush for green technologies. You might get, you might not get. Feasibility is there, not there. All that is questionable. Supply chain alignment, biggest factor right now. You have to get the precursor data. Although, I mean, largely, if you see large companies from where the import is happening on iron, steel, and other products, they are well adapted and well equipped, and they have already started publishing this number because of Indian compliances, because of BRSR coming in and other things coming. They've already been geared up to do this calculation of these numbers, but still, there's a cost of you going there, collecting the data, or interacting with them, collecting the data. There's a cost it's getting involved. And the cycle of compliance reporting initiatives, you have to go into the cycle, which is a quarterly cycle. You have to stick to that cycle, submit the report. If assurance kicks in, even that is a cost for you. You have to assure that report and then submit the report. So already, I mean, in terms of the cost right now in industry, you'll see almost there is a charge which is being set up between right through 80,000 to 2 to 3 lakh rupees of being charged at the product level calculation. That is the charge which is already been happening into the industry right now with respect to the CBAM calculation. So there's a big burden which is coming in just on the adoption perspective of this calculation. Now leave aside the transition and everything, other factors. Now when it comes to MSMEs specifically, if I have to align all of these concepts to MSMEs, again, the impact is far more larger because the pocket size is smaller for the companies which are dealing in MSME space. Largely, these companies are at the end of the spectrum, which means that they have to get the data from suppliers for sure. So again, that has a larger impact on MSMEs. Their power to get data is also lower because the companies with whom they are dealing might have a larger power in terms of their say, and they might refuse to give them the data. Or I mean, obviously, they might be not as open to give the data to these companies as if a large company is asking the data. So for MSMEs, even the parliament which was constituted, they have submitted the report. It happened in February. The report was out, and they have asked the government to push for at least a 3-year deferment for MSME sector. So they want you to consider this, and they want to defer the whole implementation for MSMEs for next 3 years. They have also recognized and come up to the conclusion that CBAM implications will have a very high financial impact, and there is a limited financial resource an SME has today. So they have also put it on the record in the report. The third thing which they also said is government engaged at the highest level. So government is already engaging with EU and USA and rest of the world because they're trying to resolve this matter through dialogues, through bilateral talks, and so on and so forth. So they are pushing the parliamentary committee in their suggestions that push the government to that. And they said that most impacted area is engineering good, which brings back to the point that most of the MSMEs are into the large scale production, which is either fabrication, converting it into a product and selling handicrafts and all. So, which is the engineering goods largely, which means that they have to go and back and get the data from the value chain to the supply chain partners. So these are some of the elements which will again put a lot of pressure on the MSMEs and SMEs of the world, especially with respect to the implementation of the CBAM cycle. Now we have talked of issues as of now. Let's also ponder upon some of the options which country is exploring or country is doing today. So you'll see a lot of news right now going on with since February. I mean, since the implementation was on, first report has gone. Government is into very strong talks with EU. Piyush Goyal has gone. Our foreign ministry is in talk with them. There's a lot of bilateral talk happening between India and Europe on ensuring that how this can be resolved and it has a lower impact onto the country. India is also exploring an option of filing a complaint to WTO, which China is already doing. So they are also exploring this option of filing a WTO complaint. I don't level itself is claiming that it is already in line with the WTO requirements, so it will not have a larger impact coming in. So the third is retransfer of CBAM proceeds. So government is also thinking of an option wherein under Paris Agreement there is a clause which says there's common but differentiated responsibility. There's a principle which everyone is signed, wherein government is pushing EU because if you at the larger level, macro level, you'll see what is happening is because we are emitting more, EU is getting more money eventually because they are getting more taxes. Out of this, government is planning for a bilateral talk wherein they're saying that you should transfer this money back to the country to India so that India can take measures to reduce down their carbon footprinting, and so that it can have a long-term impact, positive long-term impact for the exporters, so that they have green energy options available to transition. So that is also a long-term solution which India is exploring. The last solution is also in the carbon trading market, wherein companies will have option to buy the carbon credits and reduce on their carbon footprinting. When they're submitting the report, their carbon footprint will be lower. So all this is already on the chart. There's one more fifth point which I didn't mention in the list is implementing the carbon tax by the country itself. So which will ensure that because there is a reduction factor available in the European calculation, government might take benefit out of it, and then India might itself come up with a carbon tax going forward, wherein on certain products government will launch a carbon tax and you will get a credit out of it. States are also planning, again, not a very positive step for the exporters at large, but then at least the money will flow in the country and they will put it into the implementation of good sort of renewable drives. So these are the options available. Now let me just go back to the questions and then answer the questions. So I think let me go with the first question. What are the key compliances requirements under CBAM that Indian businesses need to be aware of? I think I've largely touched upon most of the compliances, how the CBAM happens, how the CBAM flows, what reports you have to submit. So CBAM is not an Indian compliance, first of all, it's an European Union compliance. So we have to, and you are not directly sort of impacted as a compliance. Importer is impacted. So he will ask you, so your products will be halted, he will not be able to clear your products and so on. So that is largely the impact at the importer level. So that's why you are facing the heat. But there is no direct compliance as of now with respect to CBAM in India. What specific challenges do Indian business and MSME face with the implementation of CBAM? How can Indian companies assess their carbon footprint in compliance with the CBAM requirements? The first part I've already answered, that what broad challenges MSME will face while doing this calculation. And I think there are two major challenges out of everything. First is getting their own data. Second, more bigger challenges getting the supplier data. So these are the two larger challenges which an MSME might face while doing the calculation. Solutions I will touch upon next slide largely in terms of what solutions could be possible. How is the carbon content of the imported goods assessed and verified? I already answered this question. I answered the next question also. How would the transit time issue will be addressed? What is the purpose of CBAM? I mean, do the EU want to discourage? I've also answered this question already. More production in EU due to, I think this. Can you share the list of websites? It's there at the end of the slide. I will show you in a while. In case of steel industry, raw material inward transportation will be part of scope 3 emission, or it is out. transportation is not the part of in for any industry. Transportation will not be the form part of the calculation. Only the product emission will form the part of the emission. So let's say, for example, I gave the example also. Pig iron is used, or iron ore is used and smelted, and then the steel is manufactured by mixing that output and the iron. Then only the mixing part is happening at your location. Rest all is happening at the precursor location. So you have to go to the precursor, or let's say the seller of the iron ore, and ask him that while smelting the iron ore or while transforming the iron ore, how much fuel he has consumed and what is the attributable emission at the product level. So he will give you that while creating this product, this amount of fuel consumption and this amount of emission I have accounted for while only manufacturing the product. You don't have to account for any other emission, no transportation, nothing. Only the fuel consumption during that process of manufacture, especially in burners, furnaces, and also for the. I'm just taking the example of steel industry. There might be other such stationary products also, which is consuming. CBAM products are specified as per rules. Yes, they are. There are list of products which they have been announced, and the list is available on the link which I will share with you. If the supplier is not able to give data required in scope 2, then what is the impact of my own export or my CBAM disclosure? They will give. You don't need to ask them the scope 2 data. You only ask them the fuel which is being consumed in the specific processes. Obviously, there is an impact. You won't be able to give your data as an output, so you have to push your supplier. They have to give you. Otherwise, you have to take actions against your supplier. The only solution is that, because you have to submit the report. As of now, you can submit it blank. There is currently directly no implication. Your importer might question you, where is that implication? That emission, specific emission, which has to come from precursor good. He might question you if he's well aware. He might not. He will just submit. The authority might question him and then he'll come back to you, because right now there's no financial implication. This might be the major issue if MSME who is tier 3 level supplier unable to have the systems to measure my sourcing is going to be a problem. What is the only way out is proper training to your supplier, choosing the supplier in an effective way, coming up with the tools, solutions, implement the solution. I mean, you have to do the calculation. Nothing as a solution is available. The only thing which government is trying to do is push this so that you have more time to get all of these things in shape. That's the only solution. Does it mean that there is no scope 3 emission mining of the pig iron? It doesn't mean that. There is a way the CBAM is designed. So CBAM is only right now focusing on the value chain emission in the CBAM products. So that's how they have come up with their mode of calculation. There might be a lot of emission in other activities and even in the transportation, but right now that is not in the scope. They might extend it later on. The scope which right now I told you has nothing to do with. That's why I said the emission calculation is different and the CBAM calculation is different. You don't merge both of them. If you have to do proper emission calculation, everything will be covered. Right now the focus is only on doing the CBAM calculation. We export special purpose grinding machines to you. How will we measure carbon emission under CBAM? I think very specific question, but I'll share you the tools and links which can help you out, or you can reach out to the experts which can help you out in doing this calculation. So again, I'm very difficult to answer, but I've given you a broad 5-step process through which the calculation can happen. And I will also show you the sheet in a while, how the sheet looks like to help you to fill that sheet. What is the percentage of MSME in large enterprise in India who are following CBAM reporting? No, data is not available. I don't have the data to give you that part right now. The only data which was available was how much impact at the overall export level, which is most probably. Is embedded emission different than embodied emission? Or it's I think the same. I have just miswrote the same in the sheet. Both are same. I'm talking of the same term. What is the impact of CBAM on textile industry? Can you share the source from which we will get the data? Also, where we can get the carbon emission data calculated for raw material produced textile industry? You have to go to suppliers only for raw material. I mean, there's no direct solution available to get the data of the industry, but there are assumptions available. If they are not giving you the data, the last resort is go on the assumption. There are product level assumptions available, but that accounts for the complete emission, not just the product emission, which can happen, which can lead to a higher number you are submitting to your supplier. So if you are going to your importer in Europe, and he might end up paying higher value. So we have to also be optimized while doing this calculation, because at the end it has a cost. Right now it doesn't have, but eventually it will have a cost. So as specific as possible, we have to go and do the calculation. Is CBAM applicable in case of service exports? No, it is not applicable. It is only applicable right now on the products which are. Great. So let me move further with the final set of slides I have. The next is on measure business. What measures business can take as a business? What measures we can take? The first is we should start initiating the data recordings at the granular level. We are all doing the financial recording. The best way is to tweak the financial recording process a bit and also record the consumption data at the same location. So you should start recording your consumption data first. That is the first benchmark or the first step of going closer to the calculation. So you should start recording your data, and also you should push your suppliers to start recording. If you are impacted by a supplier, you should push your suppliers. Large suppliers have already started doing it because they are already being impacted by Indian compliances. Like, for example, BRSR, Business Responsibility and Sustainability Report, requires large companies to publish their emission numbers, which means that they are recording their numbers internally and they're publishing the numbers. The second step is we can start installing readers, meters closer to the processes. So if the meter is right now installed at the factory level, you can install sub meters at the process level, which will give you the exact data in terms of the process consumption which has happened. Again, the idea is to be as specific as possible because it has a financial implication later. Third is you should talk to the supplier. As I said, go to the supplier, talk to him, understand how he's calculating the data. If he's not calculating the data, we should push him to calculate the data. If he's already publishing a number, we can draw the numbers from that setup. The fourth is explore possibility of renewable fuel energy sources like briquettes. So go on a transition roadmap. So the best possible transition could be your furnaces which you are using right now, the electricity sources which you are using right now. You can go for alternative sources of energy, and again, not a very short term measure, but then at least that can be explored in medium term and long term, so that your costs can go down and you become competitive day by day. Already government, if you see, even India's factor of electricity is going down. So there is a electricity emission factor every year announced by the government. Last year it was when it's last year 2023, it was close to 0.82 or 0.83, which has gone down to 0.75 or 0.76. I don't exactly remember the number, but it is in the range of 70s right now. It was in the range of 80s till last year, which means that a lot of renewable transition is happening at the India level as well. While people are using solar, they are passing on the clean energies to the grid. It is helping the grids also to reduce the reliance on the coal, which means that going forward, obviously, the country is also on the path of going cleaner and cleaner. We will see that even the grid electricity has gone cleaner. So that is only the sort of hope available right now with respect to the transition which is happening. Obviously, that's why the government is trying to push this for next 3 years, so that within 3 years, even government will take a lot of measures to ensure that the energy demographics has changed in India. Lastly, talking on for us, what is it for us for CA professionals? I think I like to talk on this slide every time I do the session with the CA professionals. I think we have to start coming out of the mindset of financial calculations. We should understand these non-financial calculations, especially those carbon calculations as well. We should learn how to do this calculation, learn how to do carbon accounting. There are detailed methodologies available. You should read, for example, GHG protocol. There is a detailed documentation available. How do you account for this carbon in day-to-day calculations? So that should be learned first. And it is not something which requires you an engineering mindset or a technical mindset to learn that. You can easily adopt and understand how the carbon calculation happens. So you should do that. Second is on collaboration. I think a lot of collaboration activities are required. You might have to get into a circle wherein you have environmental experts in your circle, which will help you to understand these calculations better. So that is something which is important. The third is participation. Do a lot of participation in the webinars. Institute is doing a lot of things to spread awareness on these type of topics and subjects, which is like a gold mine as of now. You lot of new professionals are starting the services in these areas, and it is very effective, very sort of important area, and you can directly contribute to the environment at the end. So that's how these are the few of the measures as a professionals we can take to adopt these new changes that are happening. The most important of everything is learn to calculate. So you should learn calculating these numbers. This is what the portal looks like. So this is the link of the portal. If you click on this portal, these are the resources that are available on the portal. So there is a guidance document, there is a registration document, there is a link of webinar which has happened on customs and EU, which EU has done. There's a link of e-learning portal. There are templates available for importers and operators. So operators is someone who is selling exporters basically. And there are Q&A and fact sheet available. So if you click on this link, you'll see the portal, and this is what the portal looks like. You have a lot of information available. These are the reports which I said, sample reports available for the importer, that how does a sample report looks like. You can check this report. These are few of the sample reports available. Let me just open and show you one. This is how a report looks like. And this is what you have to fill on a quarterly basis. Looks very complicated from the first glance. Sorry, whatever. Yeah. So this has all the required information in the same document. You will have guidelines available. There is a sheet on guidelines. There is a sheet on codes. So there are guidelines available with respect to how do you fill this. There's a guideline available. There's a code list, which is the code which I mentioned to you, at what level you have to do the reporting. But while you have to define your product, so these are the country code which you have to use into the report. These are the drop downs which are there in the report. These are the product codes which you have to use into your report. So they have given as a direct reference to this. And this is what you'll start. You'll fill the information first. What is the product? You'll start writing the product. Which goods are included in this? What is the name of the process? So you'll define a production process basically. So there's a fabrication company and they are defining their product. So the iron steel is their product. There is a drop down available of the product. And then you will do what type of production process is this? So you will define this fabrication process. And then what are the available routes basically? So the country is India, they're doing it at the country level. And then if you have available production routes, you have to define the production routes in this. And then eventually the name of the final output, which all routes it has taken. And this is where your entries will start flowing in. So for example, they have consumed lubrication and LPG during the period, how much they have consumed, what was the emission factor, and the calculation which has happened on the factor. Again, this is a sample, so you don't get detailed information on the sheet. There is an energy emission calculation which is there on various sheets. How do energy calculation happens? You have to fill this, and the numbers will get auto replicated. So eventually, this is what the process will look like. So total product amount of generation. So tons of 620 tons of units have been generated. This is the first part, total production. And then this is what the total emission looks like. So this is what the total electricity consumed factor from where you have drawn the factor. And then this is precursor information. So what you have bought from the precursor. So they have bought iron steel from the precursor. They have mentioned that they bought iron steel. So down the line, we would have mentioned. And then the summary will be generated. This is the summary communication which will be generated. The product names, they mentioned the product names which they're selling. Again, various categories of products they have mentioned. What is the SSC direct, which is the number, the direct attributable emission is calculated, and then main source reducing agent. What is the reducing agent of the numbers? So, I mean, this is the report finally which is generated in this format, and this will be supplied to your partner in Europe. This has a date, report date, end date started, which is the quarter. So this is how the output looks like eventually. Once the assessment is complete, what are the steps of submitting this? You have to submit it to your importer. He will submit it on the port. You don't have the access of the port. So you have to submit it to the importer only. If a company is not able to provide the carbon data, will the goods be returned back by the customs? If you don't put the file, obviously there will be implication. If you don't have the data, you have to go on assumptions and submit the report to your importer. He has to submit this report on the portal. Otherwise, your imports might get blocked. Right now, these implications have not come out because Europe is also, I mean, EU is also in the mode of setting up things as of now. So you don't see direct implications as of now, but you will start seeing very soon. No, nothing is required. No capital goods, only input. You have to only consider only inputs, and in inputs also you have to only consider fuel consumptions largely. fuel and electricity consumption. There's nothing, no capital goods, no raw material, nothing is required. Raw material only with respect to the CBAM products. If any CBAM products you are using as a raw material, then only you have to do the calculation. How do we get ourselves equipped with carbon accounting calculation? So there are, as I said, you can refer to the website of GHG protocol. There's a protocol website known as GHG protocol, which has all the modes and versions available on how to do the calculation. They even have calculators, everything is available there. It's a very resourceful website and it gives you the whole concept of accounting, carbon accounting. How does CBAM interact with existing environmental regulations in India, such as those related to carbon emission? Nothing. It has no correlation with any Indian laws as of now. So you can default on Indian laws. You can not default in CBAM. You can default in CBAM, but you don't default in Indian laws. So both have no correlation as of now. Are there any conflict of synergies between CBAM and India? There, I would say, I mean, again, there's no conflicting because they don't interact with each other. NDC is India's goal. CBAM is a product level calculation. So both don't correlate with each other. But then obviously, if India achieves the goal, the importers, the exporters, carbon emission will go down because if India achieves the goal, it means that India have moved to the renewable energy sources, adopted clean sources, clean fuels, which means that industry would have adopted these clean fuels. So that's the only correlation. Apart from this, nothing, no correlation as of now between both of these things. How can business quantify the potential return on investment for implementing carbon reduction strategies to mitigate CBAM costs? How can businesses quantify the potential return on investment for implementing carbon? So basically, you have to see the business value of your strategy. So if, for example, usually what happens is if you have a 5-year, 10-year roadmap of your carbon reduction, you will also have a financial number attached to it, and you will also have an impact generated out of it. So how much business will get impacted if you don't do that? How much product will get impacted if you don't do that? Like for example, CBAM is a live case. If you don't do that, you will broadly be end up paying $100 per metric ton of per unit of emission is what current cost looks like. So if that is the case, then obviously you will have a big impact coming in if you don't do or don't adopt these sort of mechanisms into the as a process. Why this much data is shared and how this will be used by CBAM committee when we share all the customer receiving data. There's no customer data you are publishing. You're just publishing the you don't even have to name the, like for example, when I said you have to get the data from Jindal, you don't have to name Jindal. You have to only name the product and the embedded emission into the product. You don't have to name any company, no customer, nothing. And you don't have to name anyone. You have to only name, this is a person to person report. You are giving a report to your in-person importer. So let's say XYZ company is importing from ABC company from India. ABC company have to submit this report to XYZ company only. And this report will not go to anyone else. XYZ will only upload the data. And if you see the data, it is largely with respect to the emission which is there into the product. It doesn't have any specific pricing, customer, product information into the product. Only the emission which is there into the product. So I don't think there is a confidentiality loss, but obviously you have to disclose the emission data. That is the only thing which you have. How can business develop a risk management strategy to address potential fluctuations in the carbon credit regulatory changes? Again, a very different question, but largely there is a concept which is known as TCFD or IFRS S2, which gives the process of how do you embed the risk of climate change. So it has a detailed procedure, you can follow that, and largely it will give you the perspective how that is done. Great. So I think that's it at my end. I will just hold for more questions. Over to your office. If you have any further questions with you, you can push.
So this is the last question there. Is there third-party assurance or verification required for the carbon emission calculation?
Not for CBAM right now. So you don't need to do any verification currently for CBAM.
So thank you so much. So we extend our sincere gratitude to you, sir, for the insightful presentation on adapting to carbon border adjustment mechanism, a guide for Indian businesses and MSMEs. Your comprehensive analysis of CBAM regulations and their implication for Indian businesses, including MSMEs, has provided invaluable insights into the challenges and opportunities posed by the significant global development. Your expertise in navigating the complex landscape of CBAM and its adaptation with the Indian context has been truly enlightening. We greatly appreciate your contributions to enhancing our understanding of how Indian businesses can effectively align with these new regulations and embrace a more sustainable future. Now, I would like to request CA Harsh Goel, sir, to present the vote of thanks.
Thank you so much, ma'am. So, dear speakers, guests, and everyone present, CA Sri Priya Kumarji, Chairperson SRSB, CA Dr. Anuj Goyalji, Vice Chairman SRSB, CA Prakhar Gupta ji, our esteemed speaker, Event Enabler, CA Aman Shahji, Sikasa Chairman, Haldwani Branch of CIRC of ICI. I want to extend my heartfelt thanks to everyone who contributed to making this webinar on adapting to carbon border adjustment mechanism, a guide for Indian businesses and MSME, a success. First and foremost, a big thanks to our speaker, CA Prakhar Gupta ji, for sharing your knowledge and expertise on CBAM. Your insights into this important topic have not only informed us, but also motivated us to take proactive steps in adapting to these new challenges. I also want to thank all the participants who engaged by asking questions and sharing their thoughts. Your active participation made our discussion lively, meaningful, and full of valuable takeaways. A special thanks to the event enablers, organizing team, and support staff for their hard work behind the scenes. Your dedication ensured that this webinar ran smoothly and effectively. Lastly, I would like to personally thank our chairperson, CA Sri Priya Kumarji, and our vice chairperson, CA Dr. Anuj Goyalji, for their leadership in making this informative webinar possible. Let's keep the valuable session we have learned today at the forefront as we work towards making Indian businesses more resilient and sustainable in the face of global changes like CBAM. Together, we can make a real impact. Thank you so much. Thanks to all.
Thanks everyone. To revisit today's discussions or catch up on previous sessions, we encourage you to visit the ICI TV channel of the Sustainability Reporting Standards Board. There you'll find a wealth of knowledge and insights from our past sessions as well. Stay informed and continue your journey towards sustainability excellence by exploring our content on ICAI TV. Stay connected and take care. Have a nice day, everyone. Thank you.
Thank you. Thank you, everyone.
Thank you. Tech support.